Most of the time when people show off their portfolio, they usually show off the winners in their portfolio, not the losers. I decided I'm gonna do exactly the opposite of that in this video. With the markets crashing, well, not really crashing anymore, but with the markets having a major downturn throughout the month of January. I mean, it was the worst return we have ever seen in the month of January in the history of the stock market. And since that was the case, I was decided, you know what, let me share with y'all some of the pain that I'm seeing right now in the markets with some of the stocks that I've invested in. So let's get this thing started, all right? Whoosh. What's going on, people? It's your boy Kalechi back with another video. If this is your first time around the spot, hit that subscribe button. If you enjoy anything that I talk about on this video, hit that like button. But anyway, like I said, let's just get right into it and start talking about the stocks that are punishing my heart. As we can see in my big bets portfolio, I am down 29%, almost 30%. It's been painful, y'all. It's been real painful, but let's get right into it. The first stock that is just destroying my entire heart, Lemonade, the insurance company. It is down. I'm down 66%. I was about to say 20 because usually it's like 20 is okay. I'm down 66% on this stock. I paid, how much did I put? I put $339 into this thing, and this thing's down all the way to $142. Here's the ironic thing though. The more I learn about Lemonade, and the experience that I just personally had with Lemonade is making me a whole lot more bullish on Lemonade. So recently I tried to get insurance through Lemonade for a house, which more to come on that, but I tried to get insurance through Lemonade for a house. However, Lemonade denied me, but that made me happy on the side of the investment. I was kind of pissed off when they denied me the application to get the insurance. However, it made sense why they denied me because the house needs some repairs, and Lemonade was like, well, you know, we can't just cover every single person because we have to make sure that we're taking care of business and giving insurance to the right kind of person, if you understand. And so when they did that, I was like, whoa, these guys actually are taking all this information very well, because the same information that I gave to Lemonade was the same information that I provided to other insurance companies, and those companies gave me insurance, even without knowing if the building had been fixed or not. Where Lemonade, on the other hand, was like, yo, we pumped the brakes a little bit. We need to get some more information. And it was like, oh, the process, first of all, was very simple. And then on top of it, on the other side of it, was also the amount of information they were able to gather just from me answering a few questions. And so with that being said, I'm excited about Lemonade. I might buy some more of them as they are continually in this low, high 20s price range. And they're now back to making more sense price wise, because let's be honest, last year, Lemonade, let's just be honest, it hit unbelievable heights and it needed to come back to making more sense. And it did. And you know what? I made a mistake maybe buying them too early, but it's just part of the game. I'm learning from it. The next stock that I'm getting completely destroyed in is CrowdStrike, which surprisingly earlier in the week, this was down to like 50 something percent, which is not that much. In all honesty, I've only bought about $65 of it. So it's not that much as a whole, but it's still like the premise of it. When I was buying into CrowdStrike, I kind of bought early on in CrowdStrike. And so that kind of destroyed me, but still, it's just the idea of it. I still love this company. I still believe that at the end of the day, we need cybersecurity, especially in this new age. This stock had a major run up last year when everybody was like, oh my gosh, we had a pipeline get disrupted. We had this happen. And everybody was like, oh, how do we play this? How do we play this? And everybody jumped into CrowdStrike. I still think that this company has a huge opportunity in front of it. It just needed to come back to earth a little bit. A lot of the air has been left out of it. Now it's coming down to how much cash can this business produce. And we'll be hearing from the earnings call relatively soon. The next one that I had a lot of money in that is just destroying me, which is supposed to be the hedge of my portfolio, is Alibaba. I'm down 35% in this thing. And this is the funny thing is like, this is not the only place I have Alibaba in. I also own Alibaba in my Robinhood portfolio, and that one is down as well, as you can see right here. And it's just, Alibaba has not been the best stock to hold. It's not been easy to hold on to Alibaba every single day. It's just like, oh, it's down again today. The world is normal because Alibaba stock keeps falling. As you guys know, though, I just believe that there's a lot of geopolitical tensions going on with the way China is handling some things and the way US is reacting to China. And so because of that, that is causing a lot of tensions with Alibaba stock. I believe that once all of that blows away and things go back to normal a little bit, this stock should start seeing some returns, hopefully. Now, if we go to my passive income portfolio, we can see the companies are just wrecking me. It's all, some of them are in technology, some of them are in consumer products. And the main one that is just wrecking me right now is Disney. Dog, Disney is kicking my butt. If we look at returns of 39%, but you can't base it off of that. If we go to holdings, we'll see like Disney all-time return is 14%. I've lost 14% on Disney. Part of it is I got excited with Disney and bought early, but I still believe like Disney has a huge runway, especially with streaming. It would depend. Now we'll see what happens when they report their streaming numbers coming up, but I still think Disney has such a massive runway. If you ask anybody, what are the two streaming services that you can't do without or that you will have? It's Netflix and then it's Disney. And then Disney also has their whole universe of content, the amount of IP that they control. There's just so much that they can do with that. So even though right now I'm taking not a major L, I mean, especially when you compare it to the other companies that are just slapping me all over the place, Disney is not doing that great. And then the other one, the last company that is just kicking my butt is Intel. But as you guys know, I am not doing anything on Intel. Intel is one of those that I am just holding on, and I just keep predicting the future for Intel as far as their manufacturing of chips. They announced that they're building another chip plant in Ohio. So I'm excited for the Intel. And even right now, the other day, I was listening to all kinds of creators, all kinds of tech creators talking about the new Intel chips, and everybody's super positive about Intel. So for me, I'm good on Intel. Like, it doesn't even bother me. I'm good on Intel. I'm gonna keep owning Intel, and we'll see what happens in the future. It doesn't hurt that Intel also has a pretty good dividend, but the one thing that is annoying to me, that is kind of pains me, is they're still doing stock buybacks, which is super annoying. It's like, Intel, you guys are making heavy investments towards the future. Why are you still doing stock buybacks? Like, take a pause on the share buybacks. Please. Personally, I'm not a fan of share buybacks, but it's even more so when a company needs to pivot and it's having to do like share buybacks and all this stuff. Like, please, Intel, it's okay. You don't have to do dividend increases and you don't have to do share buybacks. You can just keep going, like just invest in the business and have that cash rather than using it to buy your shares back. Please, Intel, stop it. Invest back in your business all the way. But anyway, those are the 5 companies that I'm seeing major red in. I mean, those are the only ones that I'm seeing double-digit losses in. All the other companies I own, either they're in single-digit losses or they're seeing awesome gains. All the other ones are, I kind of may have rushed into them a little bit because I got excited. But either way, that's all I got for y'all in this video. I hope y'all learned one, maybe 2 things out of this entire thing. But the main takeaway that I want everybody to understand in this video is, look, you win some, you lose some, but the fact is, understand why you bought into the company in the first place. Understand what was the reason that you were investing in that company. And sometimes you're wrong. Like you can see on these, some of these I may have been very wrong on them, but it's why were you investing in that business? Are you playing the long game or are you playing the short game? Understand the reasons you're investing in this business. And sometimes you're just going to be wrong and you're going to lose some money and you just got to roll with it. But anyway, that's all I got for y'all. I hope y'all learned one, maybe 2 things out of this entire thing. And if you did, hit that like button. If you enjoyed it, hit the subscribe button. But I'm gonna catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all, and I'm out. Peace.